This is not financial advice. Day trading is risky, so please do so at your own risk. That being said, today I'm going to break down what is the breakout strategy, how to apply it to your trading, what to look for a setup, and then just how to execute. I'll go over a concrete example as well as how I apply it to my trading specifically. So let's jump right in. So what is the breakout strategy? Well, the breakout strategy is a strategy that involves entering a position when a stock or asset moves beyond a defined support or resistance level, signaling the potential start of a trend. So basically, we find a support or resistance level that we think is important, and we wait for that to break, and that is where we enter. Now, I'll show more concrete examples of what this looks like, but this is the basics. So the optimal conditions for breakout trading. So first and foremost, fundamentals. Now for the sake of the examples, I'm going to be talking about buying rather than shorting. In some cases, you just got to flip it the other way when it comes to shorting. But yeah, part one is fundamentals. So the optimal conditions is ideally you want an asset that has been showing signs of strength. So obviously for shorting, that would be signs of weakness. And now it could be following some good news, strong earnings. It can also be an industry or a sector that's been running really hot. So a few examples of this. A few years ago in Canada, the cannabis industry was running really hot before the legalization. And recently, the AI industry has been running hot. So there's a lot of hype around it. So essentially what happens is you'll notice the little mention here at the bottom. A mediocre stock in a hot sector can often outperform a great stock in a slow sector. So that is my recommendation. Now, second is the average daily range. So what does this mean? Well, for optimal results, you want a product that moves quite a bit. This is what we call the average daily range. It's an indicator. You can add it on TradingView. I'll give more specific details as to what I look for, but the gist of it is you want a product that moves quite a bit rather than a product that barely moves, which makes sense. Now, the final component that I really think is important to consider is volume. You want to ensure that the breakout takes place with high volume or at least above average volume. Or else, oftentimes you'll get fake outs. So fake out is when it moves and then retraces. So again, on TradingView, you can add the moving average on your volume indicator to help with this. I'll show again in the example later on. And so what time frames or asset classes can it be used to trade? Well, in terms of time frames, there are no limitations. You can use it on any time frame, right? I personally recommend higher time frames. When I am identifying my support and resistance levels, I'm looking at the daily chart or at the least the 4-hour chart. I execute on shorter time frames, but that's where I'm identifying my support and resistance levels that I will take into account for the breakout, like to enter the trade. So yeah, I recommend higher time frames. I've seen more success. Now, the asset classes, there's really no limitations. You can use it on stocks, options, futures, forex, bonds. You identify support, resistance, fundamentals, breakout. It's all the same. It can be used for any of them. Shorting. So I mentioned this a little bit earlier. The strategy can be used to buy or short. However, based on my experience with stocks specifically, buying works best. I trade options, but obviously the asset is stocks. That being said, with different asset classes such as futures or forex, I believe shorting can work really well as long as the fundamentals are in line, right? So if you're trading gold or oil or whatnot, if the fundamentals are there, the technicals are there, I believe that shorting will work well with this strategy as well. So here are some common technical chart patterns I recommend getting familiar with. This is more for new traders. If you're trading breakouts, you need to know what a sort of strong breakout pattern looks like. Everyone, I think, that is experienced knows what a bull flag or a reverse head and shoulders is. But if you're new to trading, these are things you want to be able to easily identify so that you can determine where your support, your resistance is, and where you'd enter these trades. And so again, some really simple basic patterns I recommend getting familiar with in terms of technicals. Now, here's a concrete example using one of my personal trades, okay? So I'm gonna go over the details and then I will sort of go back and forth with the chart to show you what it looks like. So the following example is a semiconductor stock during the AI hype. So there's a lot of hype around those stocks. So obviously that puts the wind to your back, it helps, right? So you'll be able to see that there's a clear, strong uptrend and it is followed by some consolidation. So if you take a look here, on the left side, you'll see it ran up, then we pulled back and consolidated slightly. And then what happened is we formed something that looks sort of like a bull pennant, right? So a triangle, or call it whatever you will. And then I traced a nice little trend line. The trend line obviously could be debated or argued. There's different ways of doing so. It's more of an art than a science. Nonetheless, this is what it looked like for me. And then what comes next? Well, it's important to notice that the volume at the bottom of the chart is above the blue line. So the blue line is the moving average for the volume, which I was mentioning a bit earlier. So if we go back, if you'll notice at the bottom right here, the volume is above the moving average for that day, which means we have strong volume coming in. Then this stock has an average daily range of about 4 to 5%. When I'm trading, I trade stocks. So I'm looking for products with an average daily range above 3%. If it's less than that, I'm not touching it because it's not ideal. And there are so many stocks and products to choose from. Why take a trade if it's not ideal? So a quick overview. So you see the ticker was TTMI. You can check it out for yourself. The average daily range, that is again an indicator you can add on TradingView, was somewhere between 4 and 5% for this. And so once it broke out, I'll go through the details of how I execute later, but essentially once I get a breakout and a candle close above the breakout level on a 5-minute chart, that is where I enter. So my levels are drawn on the daily, but I execute on the 5-minute to enter the trade only. And so yeah, and so this is just one example of what it looks like. And so I'll go a little bit more in depth here. So how do I execute my trades? So I trade options, right? So what am I looking for? First and foremost, I want strong bullish fundamentals. So as I mentioned, that was a semiconductor stock in the AI hype. So, lots of buying, lots of hype, things are going crazy. Bullish technicals. So, run up, some consolidation forming. We're ready for the next leg. And the average daily range, also known as the ADR, above 3%. So we're well above 3%, almost double that with 4 to 5%. Then what do? I set my alerts on TradingView and I just move on to the next. I keep analyzing different stocks until one of my alerts goes off, right? I don't sit there and stare at it all day because there's no point. Once it breaks that level, I'm still waiting for a 5-minute candle to close above that level. If it pulls back right away, then I'll wait a little bit more because, sometimes it pulls back a little and then not long after you'll get that 5-minute candle close. But I do wait for the 5-minute candle to close above. That's my confirmation to enter. And so once that's done, I enter the trade and I usually set my risk as follows. I put my stop loss at either minus 30% or near the low of the day. It kind of depends on what the day looks like so far. So usually I'll tend to go for the low of the day. If it goes back to the low of the day or below that, it's not really moving how I want it to. That being said, sometimes we gap up at the open or sometimes we just run straight line up at the open, in which case the low of the day sometimes doesn't make sense, which is where I'll usually tend to risk about 30% of that position. I just want to be clear, risk management is super important. 30% of that position is never ever more than 2, 3, maximum 5% of my account. Now, most of the time I go for around 3% of my account per trade, okay? Now, profits and stop losses. So I scale out of my positions on winners, all right? So I split it up into 3 targets and I exit in 3 equal parts. So here's how I exit. I always take 1 profit when I'm up 30%. So I'm trading options, right? The stock itself is not up 30%. But once my options or my position is up 30%, that's where I exit a third of my trade. The reason I chose 30% is because that is typically where I will get stopped out. So I'm going for at the least a 1-to-1 for my trades, all right? My second profit target will usually be at a key resistance level. So it's not a set percentage in this case. It can be anywhere between 50 to 80%, sometimes more, sometimes less. The key point here is if there is a key resistance level, and I think we might struggle to break above that, then I will take profits again because I don't want to risk giving money back. And then the final profit target will usually be at 100% or above. Depends if I'm swing trading or day trading. If I'm day trading, I am very happy to close my position up 100%. If I'm swing trading, I will let it run because sometimes the runners go completely insane, and that's where you can make 2, 3, 4, 500% on a small portion of your trade, which really, really makes them worth it. Now, that being said, getting stopped out happens. It's part of the game. It's part of trading. Get used to it. So here I wrote, if it just rejects and goes down, that means once I get that 5-minute candle close above my resistance, I enter the trade. If it just gets rejected not long after, retraces and hits the low of the day or my minus 30%, I'll just take the loss and move on, right? You close your position, always respect your risk management. Then if it hits any of my profit targets, that's where I will adjust my stop loss and I will move my stop loss for the remainder of my position to break even. There's no reason to turn a winning trade into a losing one, right? Being up 30% on a part of my trade and then closing it out is better than having a losing trade. And so, if you're scaling out on your winners, you also need to somewhat scale out on your losers on occasion. So once again, if it hits any of my profit targets, then I move my stop loss to break even for the rest of the position to make sure that that trade remains a winning one. This is how I execute. Some people may do it differently, but again, I just want to give you guys a clear, concrete example. Now, I mentioned this before, I will say it again, risk management is everything in trading. Doesn't matter how good your strategy is. You could be the best trader in the world. Poor risk management will result in losses in the long term. So please, please never risk more than 2-3% of your whole account per trade. At the most, I would say 5%. All right, but that's kind of pushing the limits. 3% seems to be the sweet spot. Trading doesn't need to be complicated. The strategy itself is really simple. Very easy to execute, very easy to understand. Now, obviously, there's going to be some odd off scenarios. Let's say the market gaps up at the open or it breaks out, like it gaps up above the level you were looking at, how to execute. And I'll do more in-depth breakdowns of different scenarios on later videos. But I wanted to give a clear, concrete, straightforward explanation of the strategy itself, what it entails, what it looks like in practice, in execution. I've made a few breakdowns already on my channel, so if you're interested in looking at those, check out my YouTube. You'll see I post educational content and I try to really give clear explanations of my strategy, how I trade. I try to be as transparent as possible. So if you're interested in that, check it out, give me a follow, and see you guys on the next video. Thank you.